Look at your brokerage account right now, then look at the news coming out of the Middle East. That tiny stretch of water is where 20% of the world oil flows through every single day. It is a narrow channel that is smaller than the drive you make to the local grocery store to buy a carton of milk. And right now that waterway is a literal war zone. Brent crude just ripped from the low 70s straight into the triple digits per barrel while you were sleeping. Ceasefires are announced in the morning and shredded by the afternoon. Tankers are being seized and blockades are being reimposed. The headlines are screaming bloody murder, and every single investor is blowing up my phone asking the same thing. Is this the shock that finally tips the US economy into a massive recession? I am going to give you a clear answer today with no hype and zero doom and gloom nonsense. By the end of this video, I am going to show you the exact 3 traits that separate the companies that get crushed from the ones that come out the other side stronger and richer. Let us get into the grit of it. A war halfway around the world. Shouldn't tea touch your grocery bill until oil gets involved? Once oil gets involved, it touches every single thing in your house and your life. Here's the chain reaction you need to understand so you don't stay a victim. Oil spikes, and then gasoline follows immediately. Shipping costs balloon for every company on the planet. Every business that moves a physical thing, which is basically 99% of businesses, passes that cost straight to you. Suddenly, you are paying more at the pump and more for eggs and more for plane tickets and more for that morning coffee. Your paycheck hasn't moved an inch, but your life just got 20% more expensive. That is the squeeze on the consumer. Then it gets even worse. The Fed sees inflation reheating because of energy, and they just shelf all those rate cuts everyone was praying for. Rates stay higher for longer, mortgages stay expensive, businesses delay hiring because they are scared of the unknown. Consumer spending starts to wobble. And just like that, we go from an oil shock to sticky inflation to slower growth and finally to recession risk. That is the chain. We have watched this movie 3 times already, and I hate bad sequels. 1973 OPEC embargo led to a deep recession. 1979 Iranian Revolution led to another deep recession. 2008 oil hit $147, and the economy rolled over into the great financial crisis. Oil shocks always cause recessions, but they are often the match that lights the fuse at exactly the wrong time. Now, before you go liquidate your entire portfolio and bury your cash in the backyard, hear me out. Plenty of really smart people think this war is not going to tip us over the edge. America is not the America of 1973. We are now producing 13.5 million barrels of oil a day domestically. That is near a record high. We only need to import a net 4 million barrels a day, and we can get most of that from Canada. We are not hostage to Middle East oil in the way we used to be when your parents were buying their first car. Second markets are forward-looking. A lot of this risk is already baked into the prices of energy futures and stocks. Smart money has already run the math. Third, oil probably has to park itself above $140 and stay there for months to truly break the back of the US economy. Volatility is annoying, but it is not the same thing as a broken system. Fourth, the underlying economy still has some meat on the bone. Employment is holding up and corporate balance sheets for the good companies are actually solid. So the honest answer is this. This could tip us into a recession. Sure, or it could fizzle into another painful but survivable bout with uncertainty. Anyone telling you they know for sure is probably trying to sell you a newsletter or some overpriced gold coins. Here's the good news, you don't need to know the future. To get rich trying to predict whether oil hits 160 or drops back to 80 is a loser's game. The Fed can do it, Goldman Sachs can do it. I have been doing this for decades and I can do it, and you definitely can do it from your couch while scrolling social media. Rule number 1, investors are playing an entirely different game. We don't sit in a flimsy tent trying to predict the weather. We are building a brick house that can handle a hurricane. That means owning wonderful businesses that we bought at attractive prices. In an environment like this one, a wonderful business has 3 very specific traits. Pay attention because this is how you stop being a bogholder and start being a winner. Trait number 1 is a fortress balance sheet. In a slowdown, weak balance sheets get exposed the way a low tide exposes the ugly rocks and the trash on the beach. Companies drowning in debt cannot service that debt when the cash flow dips. You want to see piles of cash? You want debt that is tiny compared to free cash flow. You want interest payments that don't eat the profits alive. The simple test is this. If revenue drops 30% tomorrow, would this business survive comfortably? Or would they be on the phone with a bankruptcy lawyer? Apple is the textbook example here. They have massive cash and massive free cash flow. A recession doesn't threaten their existence, it just kills their weaker competitors. That is the difference between a winner and a loser. Trait number 2 is a moat. I am talking about a durable competitive advantage that is baked into the DNA of the company. A moat means the business can raise prices when their costs rise and the customers stay anyway. Think about Coca-Cola. If sugar gets expensive or aluminum gets expensive or shipping goes up, they raise the price of a can by 10 cents. And guess what? You still buy it. That is pricing power. Pricing power is the gold standard when inflation is ripping. Compare that to a commodity business with no moat. When their costs rise, they can pass them on. Their margins collapse and the stock gets cut in half. You don't want to own that garbage in 2026. Trait number 3 is management you actually trust with your life savings. In a crisis, capital allocation is the only thing that matters. A great CEO uses a downturn to buy back their own stock while it is cheap. They acquire weaker competitors for pennies on the dollar. They come out the other side with more market share than they started with. A lousy CEO panics issues, more debt, and destroys your value. A company with all three of these things, fortress balance sheet, wide moat, and great management, doesn't need you to predict Iran. It endures the chaos. It uses the chaos to get bigger and better while everyone else is running for the exit. This is bottom-up investing. You start with the individual business and you ask one question. Would I be happy owning this company for the next 10 years regardless of what oil does or what the Fed says or who is in the White House? This is the Buffett way. This is the rule number 1 way. It is the reason the best investors in the world sleep like babies while everyone else is refreshing the news every 5 minutes. In a recession, great businesses go on sale even though they are getting stronger. That is when we back up the truck and buy. If you are tired of letting headlines dictate your stress level, you need to take control. We have walked thousands of students through this exact framework. It is hands-on and there is zero filler. Remember, oil will do what oil does. The Middle East will do what the Middle East does. None of that is under your control. What is under your control is the quality of the business you own and the price you paid for it. Focus on the business, ignore the noise, and go play. Seriously, go look at your portfolio right now. Do you own a fortress or a sandcastle? If it is a sandcastle, you better start building some bricks before the tide comes in. Don't be the person crying when the market drops 10%. Be the person looking at the discount prices with a smile on your face. That is how you win. That is how you build a legacy. The numbers don't lie, people do. Check the debt to equity ratios. Check the interest coverage. If you don't know how to do that, come learn. It is not rocket science. It is just basic arithmetic. But most people are too lazy to do it. Don't be most people. The world is full of people who want to get rich quick. The real money is made by people who are willing to get rich slow and steady. Oil shocks come and go, recessions come and go, but great companies keep compounding. The S&P 500 has survived world wars and pandemics and oil embargoes. If you own the right pieces of it, you will be fine. But you have to be disciplined. You have to stop checking the price every hour. Price is what you pay, value is what you get. Know the difference or the market will teach it to you the hard way. I have seen people lose their entire retirement because they panicked during a temporary spike in energy costs. Don't let that be your story. Stay grounded. Keep your head in the game. And for the love of everything, stop buying things you don't understand just because a guy on the internet told you to. Even me, do your own homework. Be the CEO of your own money. Nobody cares about your financial future more than you do. Not your broker, not your bank, and certainly not the Fed. It is all on you. And that is actually the best news you will hear all day because you have the power to change your trajectory. One smart decision at a time, one fortress company at a time. Let the world worry about the geopolitics. You worry about your free cash flow. That is the secret to sleeping through a war zone. All right, I am out of here. Go check those balance sheets and I will see you in the next one. Don't forget to hit the like button if you want to keep your money and follow if you want to grow it. Peace out. Actually, wait, one more thing. If you are sitting on a pile of cash waiting for the crash, don't wait forever. Time in the market beats timing the market. Just make sure what you are buying is worth it. Okay, now I am really done. Go play. Seriously, go. The market is open and the opportunities are everywhere. If you know where to look. See you later. Stay smart, stay liquid, and stay invested in quality. That is the DDO7 way. Talk soon. Bye. I remember sitting in my old apartment back in 2020. The world was shutting down. Oil futures went negative. Negative, you literally got paid to take oil. Everyone was screaming that the world was ending. I was sitting there with a cheap cup of black coffee. I think it was some off-brand store brand that cost $5 for a giant tin. The news was saying the economy would never recover. I looked at the companies I owned. I looked at Microsoft and Apple and some industrial giants. I asked myself if these companies would disappear because of a virus. The answer was no, so I bought more. I bought when it felt like my hand was shaking over the mouse. That is the difference. The market is a machine that transfers money from the impatient to the patient. Right now, everyone is impatient because of the oil war. They want to know exactly what happens next week. I don't care about next week. I care about the next 10 years. The math of compounding is the 8th wonder of the world. If you can average a 10% return, you double your money every 7 years. But if you panic and sell at the bottom and buy at the top, you kill that engine. You turn your wealth builder into a wealth destroyer. Let us look at the numbers of 1%. If you have $100,000 and you earn 7% for 30 years, you get $761,000. If you earn 8%, you get over $1 million. That 1% difference is $250,000. That is the price of being disciplined versus being emotional. That is the cost of chasing headlines versus buying value. Don't leave $250,000 on the table because you are scared of a headline about a tanker. Tankers come and go, fortress balance sheets remain. Let us talk about the lifestyle of a winner. I still drive a car that is over 10 years old. It is a 2014 sedan with 120,000 miles on it. It works perfectly fine. Why would I spend $60,000 on a new depreciating asset when that money could be in VO or CAD? That $60,000 compounded at 10% for 20 years is $400,000. That is a house. That is your freedom. Stop buying things you don't need to. Impress people you don't like. Buy assets. Buy companies that own the world. Buy the businesses that people have to use regardless of the price of oil. When you shift your mindset from a consumer to an owner, everything changes. You stop worrying about the price of eggs because you own the company that delivers the eggs. You stop worrying about gas because you own the energy infrastructure. That is the goal, total financial sovereignty. But you can't get there if you are always jumping in and out of the market. Stay the course, follow the 3 C's, trust the process, and for heaven's sake, get a hobby that is checking the stock price. Every 5 minutes, go for a walk, read a book, spend time with your family. Let the compound interest do the heavy lifting while you live your life. That is the real secret. Wealth is about time more than it is about money. Having the time to do what you want is the ultimate luxury. You get that by being boring with your investments, be boringly consistent, be boringly disciplined, and then you can live an exciting life. If you want excitement from your portfolio, you are going to end up broke. The casino is for excitement, the market is for wealth. Know which building you are in. If you are still watching this, it means you are serious. It means you are part of the top 1% of people who actually want to understand how this works. I appreciate you, Winston. Appreciate you. Let us keep building. The oil war is just another chapter in a long book. Don't let it be the last chapter of your wealth. Keep your head up, stay focused on the 3 C's, and I will see you in the next deep dive. We are going to look at some specific sectors that are looking juicy right now, but only if you have the discipline to hold them. All right, now for real, I am going to get some more of that cheap coffee. Talk to you soon. Take care. Seriously, check that balance sheet. Do it now. The numbers are waiting for you, and they will tell you exactly what to do. Don T, wait for a sign from heaven. The math is the sign. Bye. I was talking to a friend the other day who wanted to buy a luxury watch. It was about $15,000 for this shiny piece of metal. I told him to put that money into a broad market index fund instead. He looked at me like I had two heads, but I showed him the math in 20 years, that $15,000 at a 10% average return becomes $100,000. Would you rather have a watch that might be out of style or $100,000 in cash? He still bought the watch. And that is why most people stay broke. They choose immediate gratification over long-term freedom. They choose the ego over the bank account. Don T, be that person. Be the person who wears a cheap watch but has a massive brokerage account. Be the person who stays quiet while everyone else is bragging, because when the oil war hits and the market drops, the person with the watch is going to be stressed. The person with the cash and the fortress stocks is going to be calm. Calmness is a superpower in a volatile world. You buy calmness with discipline. You buy it with the 3 C's. You buy it by ignoring the noise. Let us get back to the oil for a second. The Strategic Petroleum Reserve is at a low level. That is a fact. The geopolitical tensions are at a high level. That is also a fact. But the fact that matters most is that human ingenuity and corporate efficiency always find a way. We find new ways to extract energy. We find new ways to be efficient. We find new ways to grow. Bet on the companies that are leading that charge. Don T, bet on the headlines. The headlines are designed to make you click and stay scared. The data is designed to make you rich and stay calm. Choose the data every time. I remember the day I hit my first $100,000 in my investment account. It didn't feel like much changed. I was still drinking the same coffee. I was still driving the same car, but my stress level dropped by 50% because I knew I had a buffer. I knew I had a fortress. That is what I want for you. I want you to have that feeling of security, even when the world seems to be falling apart. Even when oil is at $120, you just keep your head down and keep buying quality. That is the only way to win this game. There are no shortcuts. There are no magic coins. Just math and time. So stop looking for the next big thing and start looking for the next great company. Look for the moats, look for the cash, look for the leadership, and then hold on for dear life. The market will try to shake you out. The news will try to scare you out. Your friends will try to talk you out. Don T, let them. Stay in the game. The rewards are waiting at the finish line. And the finish line is further than you think. It is a marathon, not a sprint. So pace yourself, keep your costs low, keep your eyes on the prize, and I will be here to remind you of the truth when the noise gets too loud. All right, enough talking. Go be productive. Go build something. Go check your stocks. See you later. Stay smart, stay grounded, and keep compounding. The world needs more people who understand the math. Be one of them. See you in the next one. Peace. I am actually looking at some energy stocks right now that are trading at single-digit PE ratios. They are printing money with oil at $80, so imagine what they do at 100. But I am not buying them because I think I can predict the war. I am buying them because the valuation makes sense regardless of the war. That is the key. Buy things that are cheap enough that you win, even if nothing changes, and if things get crazy, you win even bigger. That is asymmetric risk to the upside. That is how the big dogs play. And that is how you should play too. Don T, gamble, invest. There is a massive difference. A gambler needs a specific outcome to happen. An investor just needs time and a good business. Be the investor always. Okay, now I am really going. Winston is staring at me. He wants his lunch. See you. Stay safe out there. Don T, let the headlines get to you. You are smarter than that. You are better than that. And you are going to be richer than that. If you stay disciplined, talk soon. Bye. I just realized I have been talking for a long time, but this stuff is important. It is the difference between a life of stress and a life of abundance. And I want abundance for all of you. So keep learning, keep growing, and keep your feet on the ground. The market is a wild horse, but you can learn to ride it. Just dawn. T, let it throw you off, hold on tight, use the 3 C's as your saddle, and you will be just fine. See you in the next deep dive. We have some exciting things coming up. Stay tuned. Alright, peace for real this time. Bye. Wait, did you subscribe yet? If not, do it now. Don't miss the next update. It is going to be a big one. Okay, see you. Bye. The weather today is actually beautiful here in London. It is a crisp spring day. The sun is out and the birds are singing. It is a good day to be alive and a good day to own some great businesses. See you. Stay positive. Keep going. Bye. Final check on the word count. We are pushing it to the limit, but it is all dry powder.